Hey everybody, it's Pete. Good morning. It is Tuesday morning, November 17th, 2020. Thank you so much for joining me today. By the way, if you find these videos helpful, definitely click down and subscribe. You get updates and I really appreciate it. Well, the story of the day today is Tesla being added to the S&P 500, getting a flood of questions and emails about trading it long-term, trading it short-term. How do we look at it? So we're going to jump into read the tape in Tesla to determine the next appropriate spot where the reward potential justifies the potential risk. The stock has really been doing nothing since August. It's been frustrating a lot of people. There have been many people who've been riding the Tesla train for the last couple of years and just buying and buying and buying. And every time they made a mistake, it came back and brought them back to the promised land. Hasn't been the case. I know a lot of people that were not disciplined and actually how to manage risk. We're getting clobbered. And I hope that's not you, but if it was, you might have an opportunity here to see Tesla hit some new levels. So we're going to look at the charts. We're going to read the tape, determine where it's best setting up for the greatest reward potential to accept the risk. Stock futures are down a little bit right now. We came within, we kind of sniffed and kissed all-time highs, but didn't really quite get there. So the market's just not ready. Maybe need one or two more catalysts. We've had some, obviously, the Pfizer news and the Moderna news yesterday, consecutive Mondays, really good news. What's interesting is we're getting a lot of questions about why, if the COVID cases are exploding, why are these stay-at-home stocks going down? Such as Zoom and DocuSign and Wayfair and those kind of stuff, OSTK. And it really comes down to the stock market is a future discounting mechanism. You're not buying today's price action or what previously happened. You're buying what the stock market and those companies should be doing in the future. So obviously the inflated demand for those companies and ordering online and doing everything online is going to decrease in the future as the world gets back to normal. Fingers crossed, right? As soon as possible, but within a safe way. And that means that with the demand going down, all you need to look at is Netflix, right? Every time they talk about subscriber growth, that stock either explodes or implodes, one or the other. And that's essentially what's happening in those stay-at-home stocks. So the stay-at-home stocks taking a little bit of a hit, future discounting into where we believe we're going to be in, let's say, 6 months, just to keep it conservative. And then the get back to work stocks, to get out of the house stocks, have been bouncing. And we're going to talk today about two sectors specifically that are seeing some really solid smart money order flow right now. And those sectors right now, we'll get into the stocks in a little bit, are semiconductor stocks and oil and gas stocks. We've been getting a flood of questions in the last month about stocks that would benefit from either presidential candidate winning. We kind of shied away from an answer because it was so up in the air. I didn't want to get into conversations that really were kind of like irrelevant, really, because we still don't have a decision, even though, let's not get into that. But right now, these two sectors, with the story that I just mentioned, and maybe the presidential decision getting a little bit more clarity, the market is very quick to react. And we've been mentioning a lot recently that you really need to be on top of your sector rotation. If you're day trading, we can see it happen from the morning to the afternoon changing. If you are actively swing trading, if you're actively managing your account, which I'm going to assume that we're friends here and you're watching this because that's what you want to do. That's your goal. Your goal is to create some extra revenue each month, take home some nice extra money, and develop a skill for yourself, quite honestly, which is kind of exciting. If you're doing that, it really requires that you pay attention. And it's not that difficult. It really just a matter of running regular scans of 20-day highs, 20-day lows, stocks that are seeing increased volume or up a certain percentage. And then you just dig a little bit deeper into the sectors that those stocks represent. But, and here's the big thing, but you also want to compare those price actions to what the market is doing. So is the market strong? Which stocks are strong? If the market's strong, which sectors are weak? If the market's weak, which sectors are strong? You want to continually massage that. And look, you don't have to watch every tick. That's the last thing you want to do if you have another full-time job where day trading is not your thing, which is completely fine. We just happen to notice it a lot quicker on day trading because we see the buying and the tape and the money flowing in and out of it. but you need to do it. That's the big thing. If you're struggling with getting the right stock at the right time, I know that sounds like such a cliche. You just need to do a little bit more work. We had our coaching call last night for the boot camp, our weekly Monday coaching call, and we spent a lot of time about doing a little bit extra work. And I always, when I had my firm in New York City, we constantly talked about take your thinking a little deeper, take your thinking a little deeper. And I'm not talking about reading fundamental analysis. What I'm talking about is if you're an active trader, really think through why you should be taking risk, why you should be accepting risk on a particular idea. If you need some help with this, definitely click down and learn about the boot camp. I'd love to have you on the other side for the next 30 days. We could trade together. But that's really what it comes down to. If you're struggling right now, if you're having a hard time, or if you're in the right stocks but not making enough money, really think through the idea. What are the odds of profits getting hit? What are the odds of your stop loss getting hit? And how could you increase that argument to feel comfortable where you might even consider taking more share size and holding those trades longer? And that's what separates somebody who's struggling to read the charts or somebody who's getting paid on a regular basis, is you think it through a little bit more than, wow, it hit a scanner and I want to buy the stock. So you got to really understand how to structure that argument. And that's what we do in the boot camp. It's really about reading the tape. Traders that struggle just don't ask enough questions of their ideas and don't put the pieces together. It's just really the most newer members of the boot camp that come in that came into the boot camp because they're struggling, especially the last couple of months. They're really just running scanners and looking for stocks that are up recently and not really building an argument for putting your money in harm's way. And that's really what separates somebody from expects to make money versus hopes to make money. You really want to be in that first category where you expect to make money. So we're going to hop over. We actually have quite a bit of earnings today. Pre-market, we have Walmart scheduled, Home Depot, C Limited, SE, and Kohl's. And then after hours today, we have NIO, where that hot, the hot EV sector is reporting. Most of them traded into the EV stocks, traded into what we call a pause yesterday or an inside candlestick. So earnings or not, we're looking for an explosion outside of that candlestick. I probably will only be day trading NIO today. I don't have an existing position in there right now, so I'm going to be looking to day trade it today, and then after earnings, looking for follow through. So we're going to start out with Tesla, and we're going to take a look at what the levels are on the tape to determine where we're going to look. So you can see here clearly since August, other than this little blip higher, which most stocks actually rallied higher after August, the stock has pretty much done nothing. And this is really where a lot of people are getting crushed, where if we take a look at the weekly chart, they just look, I mean, that actually even exemplifies it even more. Not recognizing the tape changing, continuing to trade the same way. And again, the way I tell everybody in the boot camp, it's you're on the same road as you were yesterday. Nobody was on the road yesterday. It was 75. Today it's stop and go traffic, and you're still stepping on the gas like it looks like this when it clearly does not. So what happens now? What is the level now? Well, we're watching 460. 460 is the level. We're going to open up right at that level. So we had a bunch of questions last night in the coaching call. Does that mean we sell it with this monster gap up? Does that mean that we buy it with the monster gap up? Calm down. It's excellent news. The stock took a hit prior when they did not get into the S&P 500. Now they have. We want to see more than 1 day's worth of price action to have a longer term position. Very similar to what we saw in Pfizer, where Pfizer had the excellent news last Monday and sold off. Moderna actually held the bid a little bit better, but still closed below the opening price. And we warned everybody yesterday, manage the expectation after we read the tape, let the price action tell us what to do. So we're going to do the same thing in Tesla today. So what you need to do is mark Tesla's opening price today, not the closing price to start out. You need to mark the opening price and where its relationship is to 460. Is it above or below 460? That's going to tell us if we can aggressively be buyers or short selling it as an active trader. So Tuesday's opening, November 17th, is what we're watching for. Now, a little bit longer term plays, reading from that number, from that 460 number and the Tuesday opening print, do we go well bid from that point, and how many days do we go well bid? We want to see higher highs, higher lows, and a strong close. That's a big part of the trade too. Not just a higher high and a higher low, not just over 460. Does it stay above 460, and does it close above that level? If it does, then we can start to dip our toes in a little bit more aggressively. If we start to see the price action work its way out to higher timeframes, where then the weekly chart starts to do the same thing, and we start to look like this, where it's higher highs, higher lows, and closing strong. We haven't seen that yet. Don't jump in with reckless abandon. Be disciplined in your approach and let the price action, let the tape, use these tape reading parameters or criteria or skills that we're talking about right now to lead you softly into the right idea instead of going in and being like, yeah, Tesla's back, baby, let's jump in. Let the price action tell us how aggressive to be. Some other stocks that are on the right side of turnarounds right now, or we should say potential change of trends. And interestingly, we're going to start to look at some moving averages, which we don't normally do because we just want to go straight price action. Ride had an amazing day yesterday. The stock has practically doubled, pretty close in the last couple of weeks. But more importantly, it's giving us the price action. Again, keep it simple. A push and a pause, a push, and now we're going to look for a pause after maybe one more push. So we're looking for follow through in Ride today. Upwork is one that we've been watching since last week. And you can see, again, very clearly a push and a pause, a push and a pause. And yesterday just gave us an amazing, amazing spot to enter a new trade if you weren't, or if you happen to be long with us from here, another spot and another chance to add to an existing position. Taiwan Semiconductor, TSM, also gapped through to new 20-day highs, followed through, closed above the open. Question now is, do you get long? Today's lower opening is going to give you a chance to initiate a new swing trade. It has to trade above certain price action, and yesterday's low will be your stop loss. There's no reason to risk all the way back here to the breakout at 90. You can use yesterday as an example. XPEV was one of the stocks that we mentioned that traded into consolidation yesterday. And now what we are looking to do is trade outside of that consolidation. We're actually opening up higher, so we're going to open up well above that level. That's what we're talking about when we wait for a pause. You need that pause to manage risk. We have the spot to manage risk. So we're going to trade XPEV today, looking for good earnings from NIO after hours today. We also discussed BILI, which was called out in our community yesterday. We finally broke through this $49 level, which was significant. If we could zoom out, you can see just how significant it is. However, it did not close strong. It closed in the middle of the trading range, not quite a melted candle. So what does that tell me? That tells me that I'm still waiting for confirmation. I want to see a well-bid candlestick closing near the highs. This is a well-bid candlestick after the breakout, but it did not close near the highs. They couldn't hold the buying on a day that the market did close near the highs. So I'm waiting on this. Put this in the watch list. Over 50. If you entered yesterday, nothing wrong with that. It was the right time to enter it based on coming into the day. If you're looking for a new trade, we're looking at over yesterday's price action. But best case scenario for me personally, if you did not enter yesterday on the breakout, I'm looking for it to have a well-bid candlestick, maybe even a pause, and then look for a new level, because we also did just rally almost $10, $9 and change. So getting into the stocks, we're talking about oil and gas stocks and semiconductor stocks. We'll start out with the semiconductor stocks that have made it into my list right now. You can see AMAT actually had a really nice push and a pause, and more significantly above the breakout level. So what's going on now is yesterday was only the second day, went well bid. So today would be the last day where we kind of feel like that optimal entry point is still valid. It's not the optimal entry point, but it's the latest entry point to justify a new swing trade. KLAC fits that criteria as well. I'm just going to give you some ideas, and you could work on your own entries at that point. And Lam Research and Teradyne also. So you can see that the sector rotation, these stocks are actually bouncing very nicely. They got hit a little bit just after the summertime, and now are making their way back. Oil and gas stocks doing exactly the same thing. And again, I'm giving you a list so that we get these questions all the time about exactly which stock you personally should be trading. Well, obviously I don't know you. It's my job to help put you in a situation where I'll give you ideas, and then you take the ideas that match your risk, your resources, your risk tolerance, your risk capital, and your skills, and your goals, quite honestly. So whether it's a $40 stock or something a little bit more expensive, again, Hess, COP, CVX, you can see that the sector rotation here is really, really turning around. Now, the problem with a few of these is the turnaround is awesome. We clearly have a change of trend. It's gone from potential change of trend to change of trend. We have a little bit of resistance now. So whether it's a $46 stock or an $89 stock, the reward potential for a new trade up here is not as good. So what I'd love to see is a multi-day pause here between 85 and 90, and then look for a run to 102, specifically there in Chevron. So we're going to keep going down the list of some ideas. FANG, And again, you want to take a look very quickly as I'm calling these out. Where is the next level that would be a potential target, and does it justify the trade? CXO. Okay, you can see this one actually did break through resistance levels. So now we actually punch through here 55, and we have all the way up to 74 as the next level. And Exxon, obviously. Exxon has a little bit lower average true range than the other ones, but still Exxon at $38 for a little bit longer term play. Not bad to keep in mind. We're going to finish up with Lyft and Uber. Both of them still performing very nicely and holding the bullish gap, something they have not done in a while. The news that came out recently about them being able to classify, I think it was California, as independent contractors as opposed to W-2s, that kind of really changed the picture there. So both stocks are trading well and have room to go. That's really the most important part. They're pushing, they're pausing, they're following through, and they have room to go. Last one I want to finish up with is Apple. We've been hawking Apple for a while now. We've been saying Apple well bid over 120 is the level that we're looking for. Has a lot more room to go through that level. Maybe a little bit of resistance at 136, but we're looking for Apple to get back to life over that level. So again, we're not in it yet. That's the big point I want to get across. We are waiting for it to close well bid above 120 before we get involved. So the story of the day is Tesla and the S&P 500, looking for that to be very tradable today from a volatility and a volume perspective. Expect the volume to be incredibly heavy. We are also looking for NIO after hours. We also have earnings prior to, we have Walmart, Home Depot, and Kohl's coming out pre-market as well. So there's a lot to do today. Starbucks is actually trading pretty well right now as well too. So there's a lot going on, and I just can't stress this enough. If you find yourself, if you're finding the market challenging for yourself right now, there's nothing wrong with pulling it back because that's just smart business. Also, and when I say pull back, it means trade a little bit less actively, trade a little bit less share size until you start to get some feedback from your trades that are moving in your favor. It's very interesting to see traders struggling and continuing to trade heavy. And I don't mean to laugh at anybody, but it's just common sense that if what you're doing is not working, you still shouldn't step on the gas. So if that's you, maybe this is a little bit of a wake-up call to take your ego out of the equation. Don't revenge trade, which is a common phrase in active trading, especially for proprietary traders, and just hit singles for now. Hit singles, be okay, get back into a groove, narrow your list of stocks, only look at your best ideas that justify taking the risk in exchange for the obvious potential. And those are the ones that will get your confidence back. And then you could start to maybe size up and hold a little bit longer. If you need some help for this, definitely click below and look into the boot camp. I'd love to see you on the other side. Have a great day, everyone.